empty condos sitting all over Toronto right now. Has Trump's tariff war contributed to this crisis? Or is it simply just greed, oversupply, and an unsustainable real estate market? Let's break it all down today in this video. When I say empty condos, I don't mean like 1 or 2 units here and there. I mean skyscrapers, full of empty and unsellable little shoeboxes or condos, if that's what you'd like to call them. Toronto is not alone. Vancouver, Montreal, even Florida is in a major condominium crisis right now. Condos that were listed at $500,000 just a couple of years ago during COVID are now rotting on the market for over a year with desperate price cuts that still are not getting any bites. And yet, somehow, we're still in a housing crisis and still being told there's no inventory. In Canada's housing market right now, condos are definitely the weakest link. Toronto's seen the steepest drops in sales and prices, and Vancouver is not far behind. We were thinking this will be just a slowdown, but it's looking more like a full-blown condo recession. Being active in real estate, I am seeing listings pile up. Condos that would have sold in just a few days now are there just taking months. And that's honestly if they're lucky. Condo sales in April dropped 30% in the Toronto region year over year. Vancouver saw a 20% drop. Now in May of 2025, Toronto condo sales dropped another 23% year over year. New listings rose about 8% and active listings jumped 36%. That pushed the months of inventory to even higher. It is now up to 7.2 months of inventory. That's obviously buyer territory. The thing is buyers still are not coming out. This is the slowest condo market that the market has seen since the 90s. And it's not just resale listings. There is a record wave of new completions flooding the GTA. Almost 30,000 new units were finished last year. And now there's even more on the way in 2025. But that's a reflection of buyer demand that existed 2 to 3 years ago. And that demand is obviously now gone. So investors, once the biggest players in pre-construction condos, have pulled out almost entirely. This is obviously due to high interest rates and falling rents, which have completely killed the math. The average rent for a 1-bedroom in Toronto dropped nearly 6% in April, and in Vancouver more than 4%, which in theory is a good thing. Rents need to be affordable so that people can live. But when interest rates are high, the prices don't make sense for the investment. So when new appraisals on new builds are coming in at $600 a square foot below what people paid, you've got investors eating massive losses. In some Vancouver projects, units sold for $2,500 a square foot. And now they're being appraised at $1,900 a square foot. People are simply walking away, and obviously developers are panicking. Others are trying to rent, but even that's not really working. At these prices, and with the borrowing costs, anywhere between 4 to 6%, the returns do not make sense anymore. Developers are being forced to shelve condo projects and pivot to purpose-built rentals, which are ultimately apartment buildings or housing units that are designed and constructed from the beginning to be long-term rental properties, rather than being sold to individual buyers like condos. And this is happening ultimately because there is no market for pre-construction right now. Lenders will not touch a project unless it's 70% pre-sold. That is obviously just not happening anymore. As Sean Hildebrand, president of Urbanation, put it, the new condo market is currently working through its most challenging period to date, which has become further impacted by the uncertainty and cost escalations caused by the trade conflict with the US. With the Toronto region relying on condos for more than one half of its total housing development, the magnitude of this slowdown will result in severe supply repercussions. Folks, if you appreciate videos like this, please take a quick moment to like my video and make sure you subscribe. I really appreciate it. All right, so the wildest chart, which you may have already seen in my video, in Canadian real estate has recently been released. Toronto now has 58 months of supply in pre-construction condos. That means that based on current sales, it would take nearly 5 years to clear out what's already built or coming soon. I mean, that's 5 years of backlog. The numbers from CMHC and Urbanation are brutal. Since 2022, Toronto's total condo sales are down 75%. Vancouver, down 37%. Construction is basically collapsing. We're basically matching 1990s level lows in sales per capita, even though the population is much higher now. In the resale market, prices in Toronto have dropped 20% from the peak, down to $812 per square foot, and in Vancouver, condos fell 9% from 2022, now averaging around $762,000. In Toronto, the average is $678,000, which is down 16% from the peak. Yes, affordability technically improved, but it's still nowhere near affordable for most people. And with the market this shaky, most buyers are choosing to wait it out. Which brings us back to those investors. Most are cash flow negative. 81% of condo units lose money every month. The average loss is around $600. And if you bought in pre-construction and closed in 2024, you're probably down 6 to 20%. For many, that's their entire down payment just completely wiped out. So now they're choosing between losing money fast or selling at a massive loss. Alternatively, renting it out and bleeding every month. So most are going with the slow bleed. We're seeing record high listings for condo rentals in Toronto. What makes this even trickier is that a lot of these investors use their home equity line of credit. This is a loan that lets you borrow money using the equity you've built up in your home. So now they're not just underwater, they're servicing debt on an asset that is sinking. And we're not in the early innings, unfortunately. Even if completions drop after 2026, major developers are already pivoting. They're switching to rentals. They're finding new financing models. They're not just waiting for the magical price recovery. Some analysts think this is the beginning of a major shift from a high ownership model to a high renters economy. Large parts of Europe have already seen this. The era of everyone owning a tiny condo to get rich might just be over. And then with the reciprocal tariffs heating up the trade war with the US, job losses and economic uncertainty creeping in, consumer confidence is in the basement. That means fewer buyers, even a small rate cut in June likely won't be enough to shift the mood. We're in a wait and see mode. Developers are now building with renters in mind, not flippers. And honestly, that might be better for the system. Fewer absentee landlords, more professional property managers to guide those unfortunate tenants. But that shift takes time. And in the meantime, we're sitting on tens of thousands of overpriced shoeboxes that nobody wants to live in. The average condo size in Toronto is 650 square feet. And in some cases, that's generous. Some are even under 300. Like, who wants to live like that? What we need are larger units, 2, 3 bedrooms, so that they can actually accommodate a family. I mean, nobody can put a family in a 600 square foot condo. Maybe like even give people a little backyard. All right, folks, if you've watched my video, please hit the like button and make sure you subscribe. The algorithm will push this video out to more viewers like yourself. Please tell me in the comments if you're experiencing this pain, what have you done to make it more bearable? Or what is your escape plan? Thank you so much for joining me today and have a wonderful day.